So this panel is going to be discussing, a very new product, new being, okay, over the last couple of years. It's growing exponentially in want and need and desire from traders, and that's social trading. So social trading is absolutely key, and I believe these are the world's leading experts, and I leave it to Adil to take it from here.
So good afternoon, everybody. Thanks for joining us. And this is one of the last panels of the day, so I'm sure you've had an exciting 2 days at the IFX Expo. And we're going to be starting with introducing our panel. So I'll hand it over to the guys. We've got Doron from Leverade, Leon from Zulu Trade, Leo from Trade and See, and Asaf from Currency, all experts in the field of social trading. So we'll start with Doron.
Hi, everyone. Nice to meet you. My name is Doron from Leverade. As you probably know, Liquidity is today one of the largest providers of technology to retail FX brokers. We have around 130 employees located in 3 different offices, including the most recently opened one in Hong Kong. Our social product is actually Cyrix Social that integrates between social trading and MT4 from the trading server to your website. Everything is included inside.
Leon.
Hi, everybody. I'm Leo Yochai. I'm the CEO and founder of Zulu Trade. Zulu Trade started in 2008. Serves today 60 brokers, over 60 brokers. Over 70,000 Signa providers are on Zulu Trade, and close to 60,000 live account holders are trading today with Zulu Trade. Thank you.
Leon.
Good afternoon. My name is Leo Nabat. I'm the CEO and co-founder of Trinity. I think we actually invented this area back.
Let's say it's true.
Back on 2005. We are, I think, leading this area for long years, for many years, and that's it.
And Asaf from Currency.
My name is Asaf from Currency. We basically operate 2 different different and complementing businesses. One of them is a social network for retail traders. It's completely free. We're not making a dime off of it, and people can collaborate, share ideas, chat, friend each other, measure strategies, measure performance, and so forth. And the other business that we're doing is we're raising assets for money managers all over the world. We find high net worth individuals who are interested to invest in foreign exchange, and we help them find managers.
Right, thank you. So social trading, social media is a new phenomenon. I'm just going to ask the audience, does anybody not have a Facebook or Twitter account? Okay, so we've got a good client base potential. Oh, okay.
We're opening now for you.
He happens to be my partner.
Yeah. So yeah, social media is a new phenomenon, and it's going to be here to stay. And I think some of the efforts that our panelists have done to try and look at trading from a social side has been the result of Trade and See and Super Trade and the other products. What we'll do is we're just going to get a quick overview of how social trading works, so we can give the audience an example of that. Do you want to start off, Leo, and then we'll just give them what's the basics, what's copy trade, why is the phenomena around?
I think that first of all, social trading is a very nice world to the ability to share something between people. We are living in connected world today, Facebook, Twitter, and the idea is to share something in trading technology. Now, I think you can differentiate between us, all of us, what actually we are sharing between users. One approach is saying, okay, I have someone that we would like to learn from him, take his knowledge, and then actually to mirror it, to copy it, you can call it whatever you want, to your accounts. Now, I think what we are doing, all of us, is a little bit different, each one of us, by how we look on the social trading perspective. One of them is say, okay, I have one person that knows how to trade, and each trade that he's doing, it mirrors it to my account. This is one. Second option is that there is a very good expert and then you copy for it. And the third one is sharing thought and idea between all of them. There is pros and cons to each one of it. And I think that social is a very good, nice word, but don't forget, this is not Facebook. What you can do in Facebook, you cannot do in trading. Trading is trading with your money. If you have $10,000, $50,000, even if you have $500, I'm not sure that you will be very comfortable to share what you're doing or to see other people, to show other people that you are losing money or making money. A lot of many issues, regulations, many issues of liquidity. It's a very complex world, but I think the most important thing is to understand what is actually social.
Perfect. Let's
And
have some
so
add to that.
I think, so one of the things, so I want to touch on two different subjects. One of them is the social, which we don't experience, and the way we design our social network is that the amount of money being traded is not being exposed, only kind of the leverage and position ratio, so we don't see any hesitation or objection from any of the person to kind of share and collaborate real-time positions. But I think I think what kind of unifies all of us here is the concept of auto trading, and I just want to kind of try and explain kind of in a high level the value of it. So today, without auto trading, if I want to give my money or I want to invest with a money manager, I need to give my money away to someone's account. I need to give him complete control over my account. I need to trust that the performance that he gives me in Excel or whatever format he uses is correct. And I need to trust that he's not going to take the money and run away, and I'm going to read about him 10 years later in Forex Magnets that I'm not getting my money back. The way auto trading works is that I, as an investor, keep my money in my account. The trader or the fund manager trades on his own account, and there is a technology that bridges the two of them. So I get the value of participating in alternative investments while I reduce my risk and exposure both on an operational perspective and on a trading exposure perspective by doing that. So that's kind of where we see the innovation, and it's very similar to kind of like what everybody else is doing. So
I actually agree with the two of you. I just think that the way we design our product was made to make it very, very transparent. And this is what we believe makes social trading the next big thing. And let me explain. I agree with you. The fact that you have money of others, that you don't have to take them to a fund manager, but leave them in their own account is great. But the big power is when you can see those that you follow, you can see all the data about them, their past performance, their risk analysis, and that is why we've actually are putting so many efforts on this product nowadays.
Can I just add before we go that we do have CTAs, we have regulated fund managers in US, we have regulated fund managers in UK, and I'm sure across Asia as well. So you can still do an audit, you can still see their history, see their performance. So the products you're offering, they don't eliminate this aspect. We still have to do our auditing side on it. It's on, I would say, another spectrum where you have the transparency and advantage.
So I want to say there is regulation and there is audit and there is way to show performance and there is way to show performance. And we see it all the time. I just had a huge argument with a very established CTA a week ago from Australia. He's been trading for 5 years. He has more than $20 million of manager, and all he argued about is that we should not be showing open positions. He cared about closed position, and he argued why we're showing a 15% drawdown when all of it recovered. So the regulations are very, they allow you to do whatever you want as long as you disclose it, and the way you disclose it, I don't know if any of you ever read any regulatory disclosure. This is like a 60-page document that you can do whatever you want in it.
In any case, CTAs are included in all the performance pages for all the websites. So we have CTAs. And the transparency we give to the public is much bigger than the transparency that the CTA gives. Because the CTA is required to give a 3-month report, every 3 months a report. And on ZuluTrade or all the other websites, it's actually every second. So you can have a lot more transparency on the strategy and the insights, on the reviews, etc., etc. So the social part is much more strong in this case. But just to say something for the previous subject, I don't think the word social is fitting to our products very well. Because everybody, I don't want to copy anybody, just anybody. I just want to copy the best. I want to copy maybe the 2 best traders. I don't care who is trading, what is trading, whatever. That's how I feel it. I'm a customer in ZuluTrade, and I copy like the number 3 guy because I like him. It's one of the best. I don't care anybody else what he's doing. So, and I believe that any good trader wouldn't want anyone to know what he's doing unless he's getting paid for that. That's, I think, the idea of the right principle, right approach, I would say, on my view.
I want to say something about performance. Take into account when you are starting to be providing a very big provider, you're starting to face how to show performance not only with one broker. As a CTA need to provide a statement from the broker that you're working with. But what happens if you are providing and doing execution on 60 brokers? What happened to this performance? So the way that all of us, I know, Zulu, my friend, Yochai, my friend, more or less showing the same. Actually, it's real transparency to the user what actually is going to get.
Perfect. So in essence, you're aggregating information for traders and bringing that to a one-stop place.
I believe we help the industry. We help the industry very much because before you didn't have any insight to what CTAs were doing. Before ZuluTrade and all the people here, you just give some money to a money manager, and 1 year later, you're receiving a call that we're dead, the money are gone. This is not happening. You see the money going down every day, or every second, or up. It's a much better experience.
What's some of the requirements that you look for in money managers? Do you have any internal requirements that you're looking to see?
Of course.
Yeah.
I think that, I really don't believe that anyone can be a strategy provider. It's not make sense that you can, now I know maybe I have two good trades I can be. The key is here, first of all, to understand his strategy. Don't believe to anyone to say that, okay, I have a scalping strategy, for example. It's actually not working. Okay, it's not working. The key issue is here to let him trade, record him, let's see his behavior, and if it fits to the standard of profitability, good behavior of trading. For example, if you are taking 10 pips, take profit, and minus 300 stop loss, it's really bad trader. Okay? Bad trader, so we try to eliminate such.
Well, I have to disagree on the bad trading concept. I think that it's all about probability. At the end of the day, some people take 10 pips and go for 30. If they have 99% success rate, that's a good strategy. That's going to make money. It's about what make the investor more comfortable.
I would add
7 years in the business, I never see one strategy that do 10 pips and take 10 pips of profit and minus 30 stop loss that it's working good all over the time. No way.
Yeah,
if you have it, I'm
no, at some point we'll fail. At some point we'll fail, for sure. At some point.
I'm putting my money. I'm opening an account currency.
Okay.
But Lior, how can you assess trading? What makes you qualified to trade to assess what a trader is like?
I think you know how to trade. You know when what is going to do with news, what is doing with the very volatile market, how we adapt to the market condition. For example, what happened in the last 4 or 5 months? The market was dead. And although the market was dead, I think what happened in our networks is very good trading. People know how to trade in range market. Okay? So, and what happened when now it's the breakout? Look at what happened to Australian yen.
I'm going to have to disagree on that.
So this is why it's more we are different between.
I agree. We have totally different products. I mean, the way we see it is, I mean, we don't have nobody gave us the power to decide who knows how to trade. I mean, I've seen experienced traders losing their whole money after years, and I've seen new traders making tons of money. That's not, I mean, the way we see social trading is about being transparent. It's about letting everyone the opportunity to become leaders and to let others copy them. Nobody has to copy someone who's not experienced. Nobody has to copy someone who hasn't been there for a long time. But if somebody has been trading in the last 2 years and has made great results, I mean, fine, let people copy him if they want. That's fine.
Well, I mean, I have to say that I mean we're kind of I think on completely the other side of the spectrum on this. I mean, we do a complete due diligence on the people that we allow to be trade leader, and this is why we have so few of them. I think one thing we need to realize that there is basically kind of two levels of risk in a trader. One of them is trading, how he behaves in the market, and risk management. And the second thing is an operational risk. This is why we kind of go and meet all the trade leaders that we have, and I want to see that this is not a guy that trades out of his cell phone while he's doing something else. And it kind of makes a big difference. And there are some people that, I don't know, download something from the internet and it works for them. It doesn't mean that they know how to trade. It doesn't mean that when it breaks, they would know what went wrong and how to fix it.
You know, it sort of reminds me of the days that people entered into online chats and they had like predefined messages. Okay, hi, how are you? Or everything is fine, or lol, or whatever. The world is in a different place. That's what we think, at least. I mean, we can see, Facebook obviously is a clear evidence that everything is public and free and open. Everybody could say whatever they want. I don't see it any different in any other place. Again, the real measure will be eventually, if somebody has 1,000 followers, he must be good. If somebody has just one, that's a risk to follow him. That's it.
I mean, I disagree, but I'll let the panel...
Wait, it's very nice. It's very nice.
I disagree.
Great.
I disagree.
Of course.
I didn't think different.
You know what is the problem? I'll tell you what is the problem. Most of you are brokers now. It's take how much? Couple hundred dollars to recruit a customer. Then he now, after, I don't know, 2-3 trades that he thinks is copying from somebody he don't know, he start losing, and the broker lose the client. The key here is verification. The key is monitoring the trade patterns. Is very restriction for rules. Nobody, both of us already know what happened. For example, let's assume that your 1,000 people leader that started to open trade after trade after trade, churning the account in 5 minutes. And you don't have any control.
But the same could happen even to the most experienced trader in
No.
the world.
No, because you're controlling it.
Well,
Of course.
Are you guaranteeing profits?
What?
Are you guaranteeing
Never.
profits?
But
you guarantee, you go
I
to
can
jail.
guarantee a couple of things. First of all, that the strategy provider will not allow to churn the account. It will have some rules. It cannot open 100 open position at the same time. It cannot do, for example, 10 pips take profit, and lag the trade for 4 weeks. And for stop loss, and then you get margin on for all of this. This is real trading, how it works.
Listen, the trader is like the dog. Okay? If you let him free, he will screw your account. Okay? Because he will experiment with new things, believing that is the right thing to do. We've seen it. If you don't put rules, the follower is gone. That's my experience.
Of course.
How do people know who to follow on Twitter? They see who's got the most followers.
This is not Twitter. This is money.
Right.
This is not Facebook. This is money.
But transparency is...
Transparency is good.
Transparency is good. This is a very good word. But transparency need to do something.
You need rules, for sure.
And can people in the audience be tweeting what's happening just to make sure it's a social panel, yeah?
Right.
I will go to question to try and get some stats on which markets are rising, where we're seeing some growth. So, Asaf, do you want to start and tell us where's been your most popular markets where you've seen a lot of growth recently?
Yeah, so for us, the most profitable market and the one that we see the most value is the high net worth individuals and small funds. High net worth individuals and small funds. We see a lot in the US. We have a very kind of big market segment in the US. We see a lot of Europe, and we obviously see Asia, which is mainly China and Japan for us.
So is that institutional, like investment pools?
It ranges between high net worth individuals, which range between $2 to $10 million of net worth, and small institutionals that are a little bit above that. That's kind of where our target market is and where we see the growth.
Lior, where you seeing?
I think it's not secret. I think you see what we are doing. Our main market is the Asian market, Japan market. We are actually growing over almost every month for very big brokers, and this is a huge market with big potential. And we are very happy. We invest a lot of efforts there, and this is not very easy. This market is very strict regulation, very high standard for execution, platform. This is really, I think, the next and the future of the Forex market in this area.
Yeah, our number one market is Russia, since 2 years ago. So Russian traders are trading a lot, and they're eager to trade, actually. Our second largest market is Japan, and China is the third one. And we have traders from all over the world, but those three markets, they're always number 1 and 2 and 3.
Our largest market is Europe, but I'm going to have to agree with Lior. We see a lot of people coming from Asia. We see it more and more. And actually that's the main reason for which we've just started a local presence here in the region. We see a lot of growth here, and yeah, that's what it is.
Yeah, Asia, there's certain cultural elements to it. So you have a lot of influence that people can have. That's one of the reasons why social trading is very popular with the local, I think it's Ren, Facebook of China. Google Orkut is very popular in India. Do you need to tailor your product in any way to compete in these markets and attract new clients for these areas? Lior, do you want to start? Because you had a good...
I think it's little not related to that, because we're a B2B technology provider. Actually, we're working with brokers that provide our platform, and they are bringing the clients. So, and they are using currently, I think, the normal methods of acquiring clients. And also what is very important, I think, is that what we see, they're starting to build new product and track new markets based on it. Sitting here, one of my good friends, Mr. Kawaji from Invest, and one of our biggest clients here, and they actually almost invented a new market that's using it. For example, people that that traded mutual funds, okay? And actually they did great success in going through this segment. So on top of what we are providing, you can provide a very good other products, not only related to FX traders.
I will agree with Lior. Totally, I have nothing to say.
Any things you've had to customize, Asaf?
I mean, I think we're not, kind of don't have a lot of presence in Japan, but I think it's going to be a market that is going to require a little bit of customization from a user experience perspective, just the way they do business. I think China, so far we haven't customized it, but we've gotten requests for people to make adjustment to the product.
I mean, we've been getting requests for customizations for any product we've ever had. We always do that, of course. I don't see it any way different with social here in the region. It's just the standard way of business. I mean, clients want things that would better fit them.
Do traditional fund managers need to be afraid?
No, not really. Actually, can get more customers.
I think it's a yes and no. they need to think of the future, and it's either they join this evolution, right, and then of course they could be the leading members on our old communities, and if they skip it, then 3 years from now they're gonna have to find a new place to be in.
I think the ones that don't make money need to be afraid. The ones that are living off the service fees, and there are plenty of them that have $100+ million under management and getting enough money from the service fee, and they kind of transition their focus from kind of capital appreciation to capital preservation. The more transparency we all introduce into the market is going to affect them.
This is quite prominent in spot FX. What's being done to expand on futures, equities, and different products?
I think volumes. I mean, if you have a trader buying $300 million at the same moment for a future that doesn't have enough volume, cannot be executed like that, I don't think the trade will be executed. Will be just hanging around for, I don't know, maybe an hour, and then will be cancelled. So even on stocks, this is also valid. Only a few stocks and very few futures could apply to this model.
Liquidity. That's it.
FX is the most liquid market, so that's why
There's
it's applicable.
even now, there's not enough liquidity to this what we are doing. We see it, we're facing it. It's a real problem.
We execute at one time, we may execute a trade that has to be executed in 25,000 accounts at the same second. I mean, this is not possible. I mean, even if you think it, how this can be possible?
This is actually one of our biggest strengths. I mean, we came from the trading and execution part, and we have the LX Risk, which is our risk management system, and it is built. It has been actually changed to fit the social world, and the way we did it was it's quite simple actually. What we did is we support trade aggregation, so that a broker could define how many trades will go to each of his liquidity provider at the same time. And then we are actually able to handle a massive amount of copiers at the same time, giving them really fast execution with really good rates.
Guys, before you, let's face reality, okay? When you have 10,000 followers for Australian yen in 2 o'clock in the morning, lever don't have enough liquidity, believe me. Even not Barclays and even not Kernex.
Well,
there is not enough liquidity. And you have slippages, and you have
slippage means.
I think
What?
Doron's talking
There is
about
if you
the
slip it
system.
for 10 pips. There is.
Yes, of course, if you have 10 pips. And then
What I'm saying is, listen, if there's no liquidity in the market, then we can do nothing about it. But if there is liquidity in the market, then our systems are built to handle it. That's the idea behind.
There are plenty of systems that are kind of built to handle it, and it's something that kind of what we're doing on our end. There's ways to source liquidity, especially when you're targeting a large position allocation, and you'll be able to do it, either break it up or get a huge liquidity, or you get a kind of a big block. There are ways to do it. I think at the end of the day, and I think this comes down also to the trade leader selection. You got to figure out what strategy can be followed under this model, and this may be kind of like leverage opinion. Someone can be very, very good, but his strategy cannot be followed just because the way he trades, the leverage he uses, the times of day he trades. And I can tell you we experienced on our end, when we first started, people that trade the non-liquid currencies after the US market closes, the 5 to 7 p.m. Eastern time, the dollar CAD, the euro yen, they place huge position. There isn't enough liquidity to do it, and it's impossible to replicate the strategy. Even though it can work great on, I don't know, $50,000 account, when you try to do it on a $10 million account, it cannot work. And that's part of what we do on the selection. We don't accept news traders because there isn't enough liquidity to support trading in high volume during news. And it's part of our evaluation as well, which is going to keep working.
liquidity is, I don't know how many already knows here, it's actually very cruel cyber war. If you're making money, the broker making money, someone in the other side losing money. And the other sides, they are quite big sharks, okay? And then when they are starting to sense that something happening, they will not, because they are market maker, they will not lose money in the end. Okay?
You know, long before we provided social trading, we've provided risk management solutions and liquidity solutions to brokers. And
what risk? If you are a broker that is an STP, what kind of risk? There's no risk here. You want to overload this risk.
we let our clients...
Look, simple. Broker wants that the user will make money. Okay? If you are a market maker and the user make money, you're losing money. So the only option is that you STP everything outside. But when you STP outside everything, the sharks in the other side now against you. And this is very cruel world.
I'm afraid this is not exactly the case. I mean, there are some other big players in the market. Some of them we are also affiliated with. These guys can handle a massive amount of trading. We've had...
What prices?
Yeah, I agree. I agree with Lior on this one.
I will disagree with you.
What I'm saying is that...
With the largest brokers in the industry, a $300 million trade for 25,000
No
accounts, it doesn't go through.
Again,
No
listen. What I said
It's
is
not working.
if there's no liquidity in the market, then we...
Not
On
in the
euro
same
dollar, there's
price.
always
The
liquidity.
key
There is
here-
liquidity, but
the
they're not
key
going to
here-
give you the price that you want.
Yeah?
They're going to give
Sorry,
you a
what is
12 pips spread on the...
And now
on
you have 2,000 clients in 20 pips spread that now angry at you that what you saw is showing the performance is not what he got.
The
All I'm
size
saying
equals-
is that our systems are built to be able to cater, to be able to answer, to handle liquidity if it exists in the market. And that is very important because you could have a huge liquidity provider, but if you're going to send not 25,000 but 100 trades in 1 second, you are likely to get rejected on most of them. You need to
So
know
to
how
say
to
that
handle a massive amount of trades. That's it.
Disagree 100%. It's really actually demonstrated actually didn't really execute 10,000 orders in 1 second. You
So
really
what
don't
is-
know what's happening.
What is it?
You didn't reach to this level to understand what is really
All right.
to
So,
execute
I-
$100 million of trade
I
at
think-
12 o'clock, 12 o'clock in the morning. No risk management, nothing will help you.
I think that Levitt has...
But do you limit the number of users then on one follower? Do you need to limit the number of people following them? What if somebody there's a million users? Because essentially the
Yeah, what we
traders-
do, we have a solution on this. Actually, we force the signal provider to open a second profile account for specific brokers. So for FXEM, for example, if there are too many followers, that's this profile, and there's a second profile for Alpari, or a third profile for 3 or 4 smaller brokers, and that works.
works to a degree, right? Because
It
again,
works
if
much
you're
better.
gonna hit-
It works much better. I mean, it's different to send trades to one broker, and different to send trades to 25 brokers at the same time.
The problem is also with the pattern of the trading. All the current platform in all the brokers are used to work with a pattern that is normal pattern of something like the manual world, something like that, according the day. Our business is a spike pattern. Actually, you have zero almost at the time, and then you have boom, very big spike for 1 second, and then go down. These spikes, the other side cannot handle it. Don't know how to handle it.
Leon, on your point, if everybody's going to get hit on a price, then they are going to reject the rate, whether it's Alpari or FXCM.
I'll tell you why. I'll tell you what's the issue. FXCM, for example, FXCM or Alpari, if you send them 25,000 orders, that was a few years ago, it's not anymore. The database was crashing. We're getting rejects from the database. Oracle errors, etc., etc. And again, that's a long time ago. To fix these issues, you need to, every time, to send more and more trades. You need to test the system, okay? So I don't, for this kind of volume, we're good. But when the volume is going to get higher, nobody guarantees that their systems or anybody's systems are ready to sustain so many orders. So all I'm trying to say is that the systems are not built when they design the systems for Zulu trade, trading C, and currency or lever rate. They were designed for a different thing.
We were very naive in the beginning.
Exactly, exactly.
We were very naive until we started to get more traction and thousands of followers, and then we said, okay, we have a problem.
The system was designed for a CTA with 10 accounts or family.
Yes.
You know, that's it.
We've designed our risk management long before we had social. And we actually had another issue. We had to cope with a massive amount of EAs, which are trading at the same time, on the same currency, pretty much the same amounts. That was very hard for us in the past. And this is why we have changed our risk management systems to be able to cope with a massive amount of trades. The way we do it is we use multiple liquidity providers, and we are able to aggregate trades and just pass them on to the markets, right? We cannot handle any amount, I'm not going to say that, but we can definitely handle much more than what one liquidity provider could offer us in just one time.
I don't understand. I mean, I think, no, I mean, everybody has multiple liquidity providers and do it. I completely understand what we're saying here. It doesn't matter what you do. You can aggregate the trades. Eventually, there's a trade-off between what you want, the price you want, and the volume you want. There is a risk. Someone needs to offload that risk, and if he takes a $100 million position, he takes that risk. He needs to be able to offload it to someone else. The banks do not want to take the risk on a $100 million trade. They don't want to take it in the middle of the day. They don't want to take it at night. They need to offload it as quickly as they can to other brokers and be able to kind of make it on the spread. So there's always liquidity. The question is at what price. So I mean, and every broker has a way to deal with it in his own effective way. I don't think there is anything innovative in here. It's a challenge that everybody's facing.
All right, perfect. So we looked at the advantages, transparency, and we've looked at some limitations. What about the value? You've got a firm who currently does not offer social, and we're all saying social is the modern word. What's the advantages they can get in terms of clientele? Is there any examples?
Clearly, I mean, that's a volume generator. I mean, instead of looking for creative ways to make your traders trade more, I mean, let them decide who they want to copy, and that's it. I mean, they go to sleep and they trade while they sleep. That's brilliant.
I think the major advantage is that the user doesn't have to study the market, doesn't have to be a professional or a graduate financial university or whatever. He just have to believe in somebody. He believes in number one. He puts his money, he copies, he trades even when he sleeps. That's it.
This is actually what happened 7 years ago when I developed it. Why develop it? Because I worked in a different company, and I lost money in forex, and I tried to find out a way how I can still trading while I'm flying. This is how it started. And this is the main essence of this.
But now you're making money?
Now I stopped making money.
So
He makes money from other stuff.
Yes, we're making money from something.
The value that we provide to the broker is the ability to access a different set of customers that they don't have today. And a lot of them, like high net worth individuals, they may be self-trader, they may try this thing, but a lot of them don't want to get into this market. They don't want to trade. They're what we call active investors. They buy their own stock, they buy ETF, they buy real estate all over the world, but they do not want to sit in front of a computer 24 hours and look at the graphs go up and down. So they treat it as an investment, an alternative investment, and we kind of provide the brokers a different type of customers that don't want to trade.
And one more thing to add, this also open up to a new different segment of markets that is not FX related. Currently today, all the brokers eating each other FX clients. They're looking for a way how to expand the FX client. This is why they invest a lot of money. But there is a huge amount of other markets that are 100 times bigger than this, that this type of product can fit them. As I said before, the mutual fund and all of this kind. So this is actually the future.
Great.
Just adding something last. I think that all the users, they want one thing, profit. If they make money, this business for all of us is going up. If the months are predictable and it's trading in range and the signal providers are making money, the followers are making money and the whole thing is good. I mean, there are 100,000 tweets per day on Zulu Trade on Twitter. So if the tweets are green, people are opening accounts and the whole thing is good. But when we have a bad month, like June for example, where a lot of money were lost, not only on Zulu Trade, but I believe in everybody, things are not so good. So, and that's the only issue that prohibits the growth, profit. When people are making money, things are going well.
I want to look at it from a regulatory side. So I'm from the UK under the FSA. So in well-regulated markets, giving advice is, you need to have some examinations and qualification. To what extent would you say that your products give advice? And then where do people regulate from? Do they regulate from the broker side or the vendor side? And what do you see happening in the future?
I think this is also one of what the differentiates between us. We are not working with manual traders. We're working with automated traders. Why? Mainly because of regulation. For example, no one will be able to work in Japan if you're a manual trader. No social trading will work in Japan if you are a person that's selling traded. Nothing. Not working. When you are moving to the automatic trading system, platform, this is a completely different story. And then it depends on the country. Some of them require advisory license, some of them require some kind of other licenses. But this is it.
So I want to talk a little bit because obviously I think like everybody else we're spending a lot of money with lawyers, and I feel like I can sign up my law degree.
We solve it. We're actually a technology company.
Okay, so
we really don't care about it.
So we're spending a lot of money with the lawyers, I guess.
And they make a lot of money.
They're making a lot of money. There is a distinction from a regulatory perspective, both US, EU, Japan, in what is the relationship between the trader and the customer. And it works in two different levels. One of them is solicitation. Does the trader solicit the customer? And the second thing is what's called executing trading discretion. Does the trader has trading discretion over the customer account? The way our system and all the systems here are designed is the way that there is no solicitation because the trader does not know who the customer is. He doesn't market himself to the customer. He doesn't convince anyone to do it. He doesn't open an account. He doesn't do anything. And there is no execution of trading discretion because the trader does not have access to the customer account. The customer chooses who the trader is. He can put restriction. He can do manual. He can do automatic. He can select different pairs. So from a regulatory perspective, our system and everybody else's system is designed to address it, to allow it to be legal. But like Lior said, I think Japan is a little bit different from a manual and automatic perspective. But these are two distinctions that from a regulatory perspective affect.
I think in the United States, the case is solved a long time ago with the NFA. The NFA accepts this business model, and you don't need any CTA license. It's fine. In Europe, though, a month ago, ESMA, said in Greek, actually launched a new legislation where all those firms to act in Europe, they need to have an investment advisory license at least. So we've been affected from that, so we're in the process. So Europe is done, you need an investment advisory license, Japan as well. And I think by the next 10 years, this business will be highly regulated, even if you take commissions from as an IB or as a technology provider. That's what I believe, and we have to be prepared for that.
10 minutes to go. Is there any questions people have on the floor? Sure, the mic will be coming over to you. If anybody does want to use the internet to tweet, the password is Markets Pulse, and the Wi-Fi is IFX Expo Macau.
Hello.
Yeah, hi. Your name, please.
Panos Labrakos from Google. So I have a question. Large part of your success is based on having really good traders so that followers can make money. So it's profitability. So the more profitable are the followers, more business comes, etc., etc. So how do you recruit the best traders, and how do you keep them in your platform, not leaving, going to another trader or
pay them correctly per success. Good traders have a lot of followers. If you have some kind of good business model that these traders design this automatic trading works, they're getting paid. If you're getting paid, you stay.
It's an ecosystem, basically.
It's there.
What's the added
We
services?
have signal providers, trusted providers that are 4, 5, 6 years in the system and making nice money if they are good.
I mean, if you've got a trader and another company similar to yours wants to pay them more, I mean, what added value can you offer as a trader?
I don't think
The,
that
the math are the same for everybody. I mean, there's the commissions are the same, so the numbers at the end of the day will be the same. So there's no room for up or down, I believe.
And a trader doesn't have to choose. I mean, he can do whatever he wants. He can do to all the companies if that's what he wants to do. So I think, so to answer his question, like keeping them is simple. If they get money, they stay. If they don't get money, they don't have any reason to stay.
This is why one of the problem of social trading that someone tried to cope with someone that you don't know. This is one of the cases that is a problem. You need to keep in very tight leash your strategy provider. You need to pay him properly, and if this you will do it, you will get very satisfied customers, and then you will make money. That's it.
And I think recruiting them is a little bit of a bigger challenge than keeping them, just because there aren't a lot of them that are actually very good. I think we're fortunate, and I'm sure these guys are saying the same thing, that we're being flooded by requests to be trade agents to get into the program. So I think because of the whole trend in the market, I'm getting probably about 150 requests a month for people, and maybe except one, not even that. So we're getting a lot of them, and the other thing is that people that we work with, they refer traders to us because they want us to help them. So.
All right, thank you. Any other questions?
You didn't expect to get a question from Google, did you?
Hey guys, do you think there's a future in copy trading for binary options?
That's a good
No.
question.
Very good question. I wouldn't say no. I would say maybe.
I agree on the maybe.
In the current condition that the binary options guys making money, brokers making money from risk management, everything is covered inside. No,
Yeah, I mean, I completely agree with Lior. This is
because people makes money. People makes money in this industry.
because you cannot hedge your risk. You cannot offload your risk in binary option to someone else. Then having profitable strategies and unprofitable people is not going to work. I mean, they're gonna bankrupt these brokers if this is going to happen.
Try to go now to the casino and bring an expert with you that know how to count cards. See what's going to happen in 5 minutes. This is what's going to happen with auto trading in binary.
I think it's worth trying, though. I mean, you can try.
Okay, let's try.
You can see.
I'll stick to the maybe. People like binaries, people like social trading. I think
But there are different markets.
Right, but
People. Different
okay, but 5 years ago, social trade, or 8 years ago, social trading. Trading and social were two different markets. I mean, we'll see. It's too early to tell, but I don't know. Not yet.
Good luck.
Perfect, thank you for that. Any other questions? Any questions? No? All right, we're going to come to our closing comments. Basically, we want you to touch on, where do you see the future? Because the industry's been around for a few years now. New participants are going to be coming in, and how it's going to be growing forward to sustain itself. We'll start with Leon.
Yeah. I think, again, the market is driven by profit. So as long as there are going to be profitable signal providers with strategies that could be easily replicated in followers' accounts, customers will be there. Everybody's looking for profit. So as long as there's profit and proven profit with good return on the followers' account, this business will grow and much, much faster.
Dora?
I think that the market is definitely going social. I mean, that we will all agree on. And I think that this is definitely the right time to enter it. I'd say that if last year everybody looked into this market, and today or this year everybody's going to be there, because those who are not there will not be in the market in few years, and that's it.
Asaf?
I mean, I think this market is going to grow basically by kind of introducing a new participant and new market segments into the Forex space, and I think the products that exist today in the market, and not only us, are mature, are good products, and that promote customer profitability. I think the other thing which brokers are concerned about, and it's and what we do is helping address is attrition, both by targeting a different market segment, but also by making the customer make money. So customers that make money are not leaving.
And Leo, can you, in your closing comment, can you also just give us an overview of your overall growth patterns?
What?
Your growth, like, so your year-on-year growth, how much has it been?
I think this is the last 2 years was amazing. It was like a very shallow 5 years and then huge acceptance of this kind of product mainly came from Japan. I think the key point here is at least now there is a real product, first of all, that you can build more product on top of it for different markets. And one of the key issues here is now there is more tools to the brokers to attract more users and make money.
All right, well, thanks very much for our panelists, for the crowd for listening. All these panelists have stands in the exhibitor hall, so you can speak to them and their colleagues. And if you've got questions, get in touch. But please tweet away, and thanks for listening.
Thank you.
Thank you.
Thank you, gentlemen. Thank you guys very much. Saw some fresh faces and some from a couple years ago, so very nice. Very nice.